Hello, my name is Aaron Edwards, co-founder and market consultant of Santos Springs. We offer grain marketing solutions to producers in multiple countries. Welcome to our W2H grain marketing channel. Go ahead and hit the subscribe button. I also recommend tapping the bell so you get future notifications. And if you like what you see, hit the like and share this video with other farmers who care deeply about their grain marketing. If you are a corn or soybean farmer, your revenue depends not only on your production, but also the answer to three simple questions: when, how much, and how you sell. One W, when, two H's, how and how much. Our W2H mentorship provides a clear, concise, and custom approach to answering each one of these three questions for your specific farm throughout the year. Before we start this week's content, it's always important to remember that trading in futures products entails significant risk of loss, which must be understood prior to trading and may not be appropriate for all investors. This commentary and the information contained within should be considered market commentary and reflect the opinions of the author. For those of you watching this with a delay, if you are a U.S. corn or soybean farmer and want to stop being held hostage by market uncertainty, let us teach you how to place each one of your bushels in a grain marketing strategy specifically designed to optimize your farm's revenue. Click on the link and we'll work together to see if our W2H mentorship is the right next step for your grain marketing. Hello, welcome to this week's video. Today is January 28th, 2025, and we are just coming off of what is probably the most exciting corn rally since at least May of 24, probably 2023. Let's go over that in just a minute, but first, as we always do, I want to go over this week's recommendations. All right, so let's open that up. Let me get that here on the screen, and we will start with the recommendations for the week. Okay, got that up? Let's check our box. For this week, no action recommended this week. And I'm going to go over the details of that because I'm guessing this recommendation is maybe, well, if we just came off this rally and we haven't gone down, we should have been a lot more aggressive. Let's be a lot more aggressive. Or maybe you're thinking, why are we not selling more? Or if it's going up, if this is a bullish story, why are we not buying into this market? And I'll go over the logic as to why I think this is a week for us to just sit tight. But let's go through that one step at a time and go from there. All right, so we'll start kind of like we do. We're getting close to wrapping up the soybean crop in South America. I mean, the harvest has started. It's not just a picture of a combine here or there. We're all in on harvest. So let me get this to where we can mark it up and go over those numbers just a little bit. Pull this to the side and let's get this in black. There we go. The big picture is here, this number right here. This would be basically filling pods or filling grain. That's where you need that last range just to get the weight on the soybeans, but they're pretty much on the home stretch. There's still a little bit of the crop here in this gray area that is flowering, and other than that, it's not very much in this vegetative development, and then it's maturing. And then the other big number that I want to point out is just harvest. Harvest is that blue area, and that was, I think, at just about 1%, maybe 2% last week. Now we're at 3.2%. Story of two production regions. So northern Brazil, too much rain to get harvest and struggles logistically getting harvest. Every now and then you see a picture of all the combines running because they were able to get some friendly weather. Southern Brazil, too dry, hurt yields at the end. They got a life-saving rain that probably helped their crop 5 to 10% in southern Brazil, but there still is yield loss. So that's kind of the story there. Again, here's the next image I wanted to show is the pyramid. We talk about this every week because it is really central to the way that we handle markets. The base level is we need to plan a market plan portfolio. We need to place each one of your bushels in buckets and strategies that make sense for your farm. And then within those, that's where we look for opportunities. And how do we look for opportunities? Well, that's the second level up. That's that green level of the pyramid. In a nutshell, seasonals, funds, and technicals give us opportunities, and then we convert that into action. So the next part that we're going to go through is kind of the green level of this pyramid. We're going to go through analysis. I already talked about the action, no action recommended this week. We'll go through the green level of the pyramid, and then we'll kind of talk one more time about the thought process behind the action of this week, which is no action recommended. And then to wrap it up, there's always some Q&A if there's questions, and if you have questions, send them in and we'll answer them. All right, so we're going to talk about corn first, soybean second, and here I actually have the 2025 chart along with the 24 chart because I really wanted to show this contrast. If you'll notice, you'll see there's a pivotal point here. Let me move these markers down onto the screen. There we go. All during 2024, up to this point, we had the speculators in Chicago. This is the net position of spec funds. We had them negative. First week in November, they start getting positive, and then we've basically just seen this stair step up. And then once we get here, every single week we've seen them buy more. That is exciting news. That is friendly. At these lower levels here, you're saying, hey, it's worth buying corn kind of to offset the position of the fund. Say, oh, they've sold too much. They are oversold corn, so let me buy some. And then the flip side is true, right? If they get overbought, a lot of times that gives us the higher prices that's worth selling. At this price level, the price level, I'll get this in green. At this price level here, oh, and then it switched colors. Back out of that. At their current price level, they are not yet overbought. They haven't bought such large positions that they're in like this rare territory. Oh, speculators never buy this much corn. That is not what we're talking about. So there absolutely is still more room, in my opinion, to see speculators buying corn to the upside. Which begs the question, is that what will happen? Will they continue buying corn? So that's the position of the funds. Now we come into a little bit of the technicals and the seasonals. So we'll start with a nearby contract. That's March. And then I want to just point out this golden cross here. This is where we're kind of holding our breath, because if this fails, we could have easily seen this corn market do one of these. But the golden cross stayed, and then you'll see we basically had two big sessions after that golden cross. Let me back out of this a little bit. After we got this golden cross, we got this big session up, then this big session up, I guess three, that big session up. Basically 3 days of really friendly trade that took us from a price level in here to a price level in here. We're talking what, 25 cents on that rally. What's happening right now, I'm not saying it's not concerning. Yeah, of course, we don't like to see corn coming off of its highs. But what's happening right now is we have this 20-day moving average here. We ran out of steam real close to $5 right here. We ran out of steam. We got selling pressure close to $5. And now we have a 20-day moving average, and then this 200 is going to slowly curve. So our first support level is going to be here. Maybe we trade down to here, or maybe we trade down to here. Depends how fast we fall. And then if we can't hold here, then we're going to look for this 200-day. And that's where we bring up, let's talk about seasonals and let's talk about funds. So what are the chances that this market stays supported? What's the probability that this market stays supported? We still have 75% of Brazil's corn is just now being planted as double crop. So we are already coming in to a weather scare in South America. In all fairness, Brazil produces like a third of the corn that the US does, so it is a lot less. But this double crop corn, it either competes with our export business or it doesn't, and it comes just before our corn crop, about 2-3 months before our corn crop. So any weather scare out of South America typically says, oh, they're going to need more US corn. So as long as there's that uncertainty, a lot of times that just kind of keeps demand propped up a little bit, at least into the spring. That's the first story. The second story is the USA is the largest corn producer in the world, but all of the northern hemisphere is coming up to spring planting of corn, and that's when the lion's share of global corn is produced, not only in the US, but mainly in the US. We're about to come into weather risk or uncertainty about acreage in corn. So seasonality would say we should drift higher. The funds are willing to buy. They've shown that they're willing to buy. And technically speaking, we're above, we're very well supported. Now we're looking for resistance. My hunch is that maybe not on the March contract. This is a nearby contract, but my hunch is that yes, we will have quite a bit of resistance around the $5 mark, but I think that there is a decent shot that we keep knocking on $5 at least a couple more times. Now I'm not saying it goes to $5 and stops, right? But $4.90, $4.95, $5.30, I don't think this is going to be our last at bat with price levels in the nearby contract close to $5. That because of the seasonality, because of the fund's willingness to buy this early on into the season, and because of the technical strong trade, I don't think this is our last run at $5. And that's the main reason that I'm a little bit patient or willing to hold off on more sales now. Then the flip side is, I wanted to talk about corn, right? So corn, we got started on an average on new crop corn, but I do want to point out just the sheer price level of this. All right, so new crop corn right here, this 20-day moving average, 200-day moving average is at 455. The 20-day moving average right over here is at 452. It has not yet experienced this golden cross. Will it experience it? We don't know, but it hasn't. And we already got started on a recommendation right about in here. Said, hey, let's take a stab at some new crop corn sales. Let's start averaging into some new crop corn sales. So my thought is, hey, if around that 450 mark, Board of Trade price, I realize it's a little lower on most people's cash markets, but hey, mid fours, we got a stake in the ground. We started making sales. First of all, if you look at recent history, it's not that bad of a place to start averaging in. But secondly, and most importantly, if we get this golden cross, who's to say we can't make a run up closer to those $5 marks? So I'm not very excited, since we have so much of the calendar ahead of us. I'm not very excited about saying, let's layer into this, let's average in. And then you could say, well, then why aren't we buying new crop corn? Why aren't we buying it back? because we don't know for sure that we will get the Golden Cross. And if this fails, this might be one of the best opportunities we had, but we will have very likely price ranges in here as it tests it. So if we want to increase our percentage sold at a similar price level to what we have sold at, we very likely will still have that opportunity. We're probably not going to get just absolutely the bottom falls out of this market and we never come back to this price level again. So in my opinion, at this price level, we likely have at least 1 or 2 more weeks of opportunities, even if kind of the worst happens where the bottom falls out of the corn market. But I think it's more probable that we'll just see that new crop or the old crop contract continuing to knock on $5, and then the new crop contract saying, hey, if I want corn to trade hands, I better get some work done. That's my expectation, but and my hope as well. Let's shift gears now to soybeans. In soybeans, we've only had the speculators, we've only had them positive for the last 2 weeks, and I included the 2025 along with the 24, and we just now are starting to get speculators excited about buying soybeans. They are not also in that level where it's like they are overbought, but they've started buying for the first time since 2023, and last week they bought more. So it's kind of the similar logic, but soybeans have to play catch up from a pricing standpoint. So technically speaking, let me get a black marker here so we can mark this up. Technically speaking, soybeans hit this resistance level and they're turning down. Okay, so the question is, are they going to come down here, or are they going to find support here at the 20-day? And if so, it's about time for them to turn around. And furthermore, if they do find support here at the 20-day, do we have a shot at this Golden Cross? And we saw what happened with corn after the Golden Cross. Oh, we can really get off to the races. We can really have a friendly soybean market. How excited can we be about soybeans? The fundamentals, so we talked about corn a little bit. I'll actually shut this off because this is an important thing to go over, and then we'll open up the other chart. With corn, technically we got the Golden Cross. Fundamentally, we have South American weather risk now, North American weather, starting now, the potential now, and then February, March, intensified as they're siphoning a corn crop in Brazil is producing. And then right as that comes to an end, we start rolling into the major weather risk of the year, which is North America's growing season, and the U.S. is head and shoulders above all other countries that produce corn. So we have a lot of weather risk ahead of us, shorter term, that could significantly impact corn prices. And ahead of that, given tighter fundamentals, ahead of that, the speculators are saying, hey, give me some corn. I want to ride this thing from the long side. That's all friendly news. With soybeans, it's a little bit trickier. They're just now starting to get long, but we do still have this monster harvest coming out of South America, and a lot of it is unpriced. And then the next significant weather risk we'll get is North American, but U.S., leading the charge on that. The U.S. growing season for soybeans, which is still a little bit of a ways away. So we don't quite have that shorter term potential weather story or fundamental story for soybeans. And we will have this large supply that is coming out of Brazil now. What's interesting to me, though, from a fundamental standpoint, is that we have known about the monster soybean crop out of South America. If anything, it's gotten a little bit smaller at the end. So what's news? What could rock the boat a little bit? the fact that the speculators, even though they're not as excited about buying soybeans as they are corn, the fact that they've started buying soybeans, it makes me a little bit more confident, or a little bit, it makes me feel a little bit easier about the fact that the soybean market probably is supported. And to the extent that it's supported, and to the extent that speculators continue to buy it, I would expect that we would see a golden cross in old crop beans. And let me pull up the chart on the new crop beans as well. All right, so I'll just draw this. First of all, on up here we have March. We get the marker. There we go. First thing here is we have March 2025. So a golden cross might look something like this for old crop beans, that we could still get that move. I don't think that's beyond the realm of possibility. Shorter term, maybe not on the March contract, because we don't have that much longer on the March. Who knows? I mean, who knows? I'm still concerned shorter term about the March contract, because we do have a significant amount of selling pressure in Brazil. So, and I'm guessing that's going to hit mainly the March and the May contract. The timing of this is tough, but I expect we could get friendly trade. And then the new crop beans, they still have a lot of work to do. But if this is going to go up like that and that'll come down, back and forth here, maybe that's February and March. Maybe we spend some time. Maybe that's just a couple more weeks. We don't know how quickly or how much time it could spend between these two levels. But if it gets up over that, taking a stab at 11 or 11 plus dollar new crop beans, I don't think that that's beyond the realm of possibility with what we know today. Now, as you well know, I don't pick prices way out in the distant and say I'm not doing anything until we get there. Week by week, we make decisions. For this week, I feel like the bulls kind of fired a warning shot, made a good rally on corn, decent rally on beans, and that can make us more hopeful for a early spring or mid-spring or even summer rally. And I think we can start having just a little bit more optimism about price levels moving forward, and enough optimism to not feel like this is the last opportunity we'll have this year. I don't think we need to look at these markets and be afraid that this is the one that got away, in my opinion. Now, as you well know, we don't have a crystal ball. We don't know the future. We don't know the next headline. But typically we have friendly spring market rallies, and we have a scenario where how confident would you be to say, no, I am so sure that all of the headlines moving forward will be bearish to where I'm going to sell this. Another important caveat is that we do have the FOMC. Basically, we have the Fed meeting about interest rates. That's today and tomorrow. So that inflation is still a concern. I don't want to overstate it. I think that's probably a headline for the future, or maybe we'll just blow over it and won't be a huge deal. But it is important to note that that is happening, and that could also tip the scales a little bit shorter term, one way or another. Bottom line, I'm cautiously optimistic that we got a good rally, and it probably won't be the last one. And with that, we have chances very likely at picking out these peaks and averaging into these markets. I'm happy we got some work done. We used the rally. And my hunch, my opinion, my thought is that spacing out sales is valuable. We got with the opportunity given here shorter term, we got the work that we needed to. Now we kind of wait for the next round. That's kind of where I'm at from a mindset standpoint. And then let's just go over the summary. Let's get those notes back open, and let's think about the rationale behind this. And then we will go to the questions and answers and wrap it up for the morning. All right, so here we go. no action recommended this week. Corn is not, it's seasonally not a buy or a sell. Beans are still technically a sell because of South American weather, but it's the end of January and that seasonality comes to a close in January. So by next week, they'll be out of that seasonality. The managed money, they are bought on both corn and soybeans, but they are not bought at a high enough level for us to trigger that box. And both corn and soybeans are in up trends. From a basis standpoint, let me go ahead and get the microphone up here. How will basis levels respond when corn and soybeans test support? That's my big question. So we got this rally, now it's coming down. At some point in time, they'll test support. How is basis going to behave at that point? Will it continue pressured? Will it continue softer? You have to remember that when we get these nice rallies in the futures market, great, but a lot of times they are led by speculators. And when that's the case, basis doesn't necessarily perform as well as futures because it's not a demand-driven rally for corn or soybeans. It's driven by speculators buying the futures. So I'm very curious to know kind of how will basis, we got this rally, basis softened. If it comes back down to support, what'll happen with basis? Because that might give us a little bit of an idea of the appetite, like actual demand. So for this week, it's mainly just let's hold our breath. If these markets come down a little bit, let's see what's happening to basis. From a technical consideration, let me get the microphone up here. Soybean markets are above 20-day moving average, but have not gone over 200-day moving average. Corn markets have traded well above 20-day moving average and 200-day moving average. For both markets, the question is, will they stay supported? So I will drop just in the email, you'll get a PDF that has kind of the breakdown of the recommendations so far this crop year. And also got a couple of questions to answer, and then we will wrap it up for the day. Why is new crop corn not going up with old crop rally? Okay, why is new crop corn not going up with old crop rally? I think there's a couple of points here. First of all, there is no threat to new crop. So just because speculators got excited about buying corn and they're buying the nearby contract or at least March, May, July, just because they got excited about buying corn doesn't necessarily mean the market is concerned that we have a long-term corn shortage issue that goes all the way into new crop. The second point is we talked about weather risk. There is no threat to new crop. So far on the books, new crop's perfect, right? There's no acreage story. There's nothing that has threatened it. So from a management standpoint, what we did was we got that first little rally, saw some of the better opportunities that we had seen in a very long time, and we put a stake in the ground. We said, okay, let's get started. If mid fours is the worst sale of the year, that's still probably going to be better than a lot of our opportunities that we had throughout 2024. So let's get a stake in the ground on new crop. Good deal. But now, in my opinion, we have that anchor. And our goal now is to just make our future sales until the calendar tells us that we're, playing with fire, which we still got some time to do. My thought now is, hey, unless something drastically changes, let's try to make our future sales bring up our average. We got our anchor. Let's try to, let's play ball and see if we can't bring up that average corn sale price. We've got a position. Let's improve it. There isn't enough of a bullish story to make us worried about corn in the future. There isn't a bullish story tied to new crop corn. All we've really had is speculators being willing to buy some old crop corn on the board. So as exciting as that is, and as fun as it is to see corn prices in the upper fours, great. But as soon as we got closer to that $5 mark, it varies contract by contract, we did see that selling pressure on top of it. So we do still have farmers who say, hey, upper fours, I'm a seller. And as long as that's the case, I do think it's going to be, we have a little bit of a psychological barrier to get up and over that $5 mark, and the new crop hasn't moved. Now, it won't surprise me if in the course of the next, say, 4 to 6 months, if we don't have a shot or chances at getting some of those new crop sales made at prices that we've seen the old crop trade at. I don't think that's too much to ask. We just need a little bit. We just need a little bit more out of this market. Question number two. Question number two. Is there still a weather story in South America? I mean, until harvest is over, there's always the potential for a weather story. And we saw harvest is just over 3% completed. So there's still a long ways to go on the soybean harvest story. But if combines are rolling, I mean, yeah, it might be a little bit rainy, a little bit hard to get the crop out. Most of the Brazil soybean crop, I'm not saying it can't get smaller, but most of the weather risk is already behind us. I think, was it, I'm trying to remember off the top of my head, 15% that was flowering still, or some low percentage. There's already combines rolling. And yes, there have been hardships at harvest, especially in the northern areas with just too much rain and being hard to harvest. But typically, those challenges in harvest make it a logistical nightmare, an operational nightmare. When it's all said and done, maybe it hits quality. It doesn't usually affect national yield. You know, it's an image you see of a nightmare in the field. It's not necessarily a USDA report changing or, you know, Chinese buyer changing number. That's not usually what happens. So from the soybean standpoint, I think we're deep in the fourth quarter of a weather story out of South America for soybeans. Corn is a different story. 75% of Brazil's corn is raised as a double crop, and they're just getting started. So we still have the entire weather story, or basically the first chapter of the weather story of corn in Brazil, double crop corn, following soybeans, is that, hey, it's too wet to plant on time. So they're not delayed yet, but we could still very easily get bullish corn stories. And it's not unusual to get bullish corn stories from a weather standpoint, because it is a double crop. So the double crop corn down there, sometimes it yields okay, and sometimes, you know, you can cut off 30-40% of that yield depending on how weather plays out. So it's a smaller crop, but there's still a weather story mainly on corn, I would say. Even though it's a smaller crop, it could impact markets in a friendly way. Question number 3, will the soybean to corn ratio come back to more normal levels? So just for context, right? If you take the new crop, this is a battle for acres question. That's what we're getting at. If you take the new crop soybean price divided by the new crop corn price, typically you get that ratio. Different advisories or different research groups would peg that at different numbers. But some pros between 2.4 and 2.5 would catch where a lot of those advisories would say, hey, if it's above that, it favors. If it's above that, it favors more bean acres. If it's below that, it favors more corn acres. My opinion of that is I think of that more as a normal range, and between, say, 2.3 and 2.7, I say that's kind of a range of normal. And so I'm not quite as cut and dry well over this as that, because personal opinion is that that acreage isn't super flexible from one to the other. Regardless of how you view that exact number of that ratio, where I just divided it out based on yesterday's close, and I think we're at 2.25. So beans are cheap relative to corn, even out of that range, right? Even if you go with a generous range from 2.3 to 2.7, we're still beyond that. Yes, I would expect that ratio to come together. While there isn't necessarily a bullish story for soybeans right now, and there kind of might be for corn, I do think it's important to note that with soybeans, is the story going to get more bearish? And honestly, I don't really see any further bearish news that could impact soybeans more. Weather risk is over in South America, okay, so they have a monster crop. So we've known they've had a monster crop for months, and it's undersold. Well, we've known that for months, so give me more, If you're bearish, it's like, what's the next headline? So very cautiously optimistic, but if farmers in Brazil have to sell, but speculators are willing to buy soybeans, we could see the selling pressure out of South America be offset by buying pressure from speculators, and we might just see soybeans sideways or even sideways to up. So I think for soybeans, if we can get through the Brazilian harvest, through the South American harvest with soybeans sideways to up, I think that's good news. Not down, right? Sideways to up. And then with corn, I think that we've seen that close to that $5 mark, there is selling pressure. So I think that there's a tall order to get above and beyond that. I'm not saying it's impossible. I'm not saying it won't happen. But we have to chew through a lot of sell orders close to that $5 mark, I would guess, before we get corn going to the next level. So again, running the risk of taking a stab at the future when we all know I don't have a crystal ball. But my expectation, it would not surprise me if we kind of see corn struggle every time it gets closer to that $5 mark. It struggles for the next several weeks, maybe months. And then soybeans gradually chop sideways to higher. And that gap or that ratio slowly comes down. I'm not saying it has to go to 2.5 or 2.6, but hovering between, say, 2.3 and 2.4 with soybeans sideways to higher, corn struggling to get over $5, I think that that's not a tall order. And that's probably, if I were to take a stab at as we roll through February into March, I'm guessing we'll see that ratio closer to 2.3, 2.4. And this last rally is good news. If you go back and watch videos from maybe 2 weeks ago, 3 weeks ago, maybe a month ago, say one of the questions was, is corn going to pull beans up, or are beans going to pull corn down? We still don't have that answer. We might still have soybeans just the bottom fall out of it, but we got a big old rally on corn and technical strength, and there's plenty of reasons, in my opinion, to be at least somewhat optimistic corn. Speculators are buying it. We have seasonality ahead of us, and I feel like now, while it was a question a few weeks ago, I feel like now it at least leans towards corn pulling beans up, and that is great news. So we'll take this one step at a time. I would suspect we still have kind of pressured markets coming into next week, and hopefully we get a definitive support sometime this week or next week. We're not quite there yet. Let's take this 1 week at a time, but I'm a little more optimistic this week or those last couple weeks than I've been in a while. It's nice to have good friendly markets. Thank you for watching, and let me know if you have any questions.